It's been a good year for the TSX, as it's up over 20% so far in 2025. But there's one stock that has simply been red hot in recent weeks, and that's Lithium Americas. In just the past month, it has tripled in value. Its market cap is still fairly light, however, at a little under $3 billion. Here's what's been sending it flying lately, and whether you might want to jump aboard this rally. It all started when the US government was rumored to be looking at taking a stake in Lithium Americas last month. And on October 1st, it announced that it will indeed be taking a 5% stake. Prior to this news, Lithium Americas stock was going nowhere this year. In August, the US government announced to be taking a stake in computer company Intel, which sent its shares soaring, and now the same has happened to Lithium Americas. Investors seem to be looking for safe, Trump-approved stocks to invest in, which may get favorable treatment and not have to worry about tariffs. So it's easy to follow the logic here as to why both Intel and Lithium Americas have been doing well of late. For the US and Trump, this is all about reducing its reliance and exposure to China. This is all about the Thacker Pass, which is a lithium mining project that Lithium Americas is developing as part of a joint venture with General Motors. GM has a 38% stake in the project, while Lithium Americas owns 62%. Lithium is needed for cell phones, renewable energy, electric vehicles, and batteries, which can be crucial for data centers. The problem with the US is that it produces less than 1% of the global supply of lithium. So this is an important need for greater lithium development domestically. And while there may be trade issues right now between Canada and the US, it's still a far friendlier nation for the US to deal with than China. But does this make Lithium Americas stock a good buy? That's the big question right now. Lithium Americas doesn't make any money. It is continuing to post losses, and that's probably not going to change anytime soon. While the Thacker Pass is an intriguing project, it may not be in full-scale production until 2028. Between now and then, a lot can change. Lithium Americas will probably burn through a lot more cash, and different trade deals could take place between now and then. There's a lot that's happened so far in 2025, and Trump hasn't been in office for a full year yet. Consider that. How much might change by 2028? Having the US government invested in Lithium Americas does undoubtedly reduce some risk for investors, since obviously there's a big incentive there to make sure that the lithium project comes to reality and perhaps starts production earlier than expected. However, could Trump put policies into place that are more favorable to GM than, say, Lithium Americas? We know he's primarily interested in helping US businesses, and that makes me wonder about how this may play out in the future. If he'll put pressure on Lithium Americas, which is based in Vancouver, to give up more share of Thacker Pass to General Motors in exchange for helping to add funding and support for the project. Remember, Lithium Americas isn't making money, and it's going to need regular cash inflows and loans. Trump has leverage and power here. And this stake in Lithium Americas came about as the US Department of Energy was renegotiating a loan for the lithium project. The government again used this leverage. Don't forget that. The one thing I don't like to do is invest based on short-term trends or especially government policies, because they can change drastically and without warning. By 2028, Trump's plans might change, and a new president taking over in 2029 may have different priorities and policies altogether. That makes investing in Lithium Americas a risky proposition right now. Plus, who knows what demand will truly look like for AI data centers and EVs by then. While the expectation is that it will continue to soar, it's by no means a foregone conclusion. AI should be more efficient, and whether demand for EVs will hold up is by no means a guarantee either. Lithium Americas is still a speculative and high-risk trade, no matter how you look at it. This is a cash-burning business with the US government as an investor now. That doesn't mean it's become a safe buy or that the Thacker Pass will start producing lithium a whole lot sooner than expected. Even if it does, the US could demand a greater cut of that. The mine is, after all, located in Nevada. If you want to buy Lithium Americas stock, you should be aware of the risks in doing so. While it has been rallying fast, just remember that as quickly as it took off, it could also fall. Trump's policies can have a significant impact on the stock. And while right now they are helping it, that may not necessarily be the case in the months and years ahead. Lithium Americas is a speculative buy, and for most investors, it's probably too risky and volatile to invest in. But even if you are thinking about investing in it anyway, I wouldn't suggest taking on a big position, given all the uncertainty. What do you think of the stock, and are you planning to buy it? Let me know in the comments. Thanks for watching, and if you enjoyed this video, please be sure to leave a like, and don't forget to subscribe for more.